Bitcoin is a bank in cyberspace. Monetary energy, core of the earth. Doubles every year. Listen to my words. Selling doesn't hurt. Selling is absurd. It's like cutting off your wings, but you want to be a bird.
We can see there's 10,539, so obviously a few more scam coins have come up. Market cap sitting at 1.3. I did say we are going to be possibly looking at the 1.2, and I'll show you why I was saying that. We've got the volume today is increased by approximately $28 billion. BTC dominance is above the 45% now. We are just, we're still going there, and I'll show you a little bit more on this, right? So obviously market takes a bit of a dump, everybody's panicking, and that's because of the stupid death cross. Anyway, so let's go straight into the chart and show you what's going on. So you can see the market dominance, BTC dominance, is now come back to this zone exactly as we kind of thought. We said like it has to. So we are close. We are definitely going to try and break this at some point, but we are finding heavy resistance here. As I said, we can have a possibility where we might get rejected here, come back down, test this, and then move back up. So we are going to try and break this particular line. We have to break this line in order for the market sentiment to come back. Also remember, Bitcoin is king. When Bitcoin moves up, everything will be carried along with it. So right now, if you are thinking about alts, this is no financial advice. You have to definitely be very careful, right? If BTC goes down, dominance can go up, even though if the market is down. So what it's saying is the whole market is reacting much more aggressively to Bitcoin, right? Where Bitcoin is now pushing back up. It's the king, it's going to push up, right? So markets giving the dominance back to Bitcoin. That's what I'm saying, right? We talked about, so this is something I just drew up. I don't want to really talk too much about it. There's a lot more going on here, right? So, remember how we talked about this was the 2020 curve. This was the 2019 top curve, right? And this is the 2019 just before the dip. So we're looking at certain patterns here. There's a lot more going on. This is something I was using as a maths, but more importantly, what I'm trying to figure out here is like, okay, how did the curve look like, and where would the top be if we were to have a top similar to any one of these, right? So this is what I was looking at here. I was like, okay, this is the reaction. We follow each one of them. So 2020 to current, how we're following this particular pattern here, or even the 2019 pattern here, this blue one here, right? Just before the dip, and how we just after the dip, how we reacted. Everything, I was just looking at for the similarities, as you can see. And if we're looking at the 2019 top and how the pattern played in 2019, then we should be moving on this trajectory and going up there. So these are how we know your lengthening cycles, right? So your cycle gets a little bit longer, but this is what it is. And I mentioned how this cycle feels too similar to the 2019, all right, and the 2013. So remember, I specifically never mentioned 2017. So in 2019, you can see we had this particular zone here. So where we came out, we did this, and then we came down, right? Until we had the 2020 dump, right? So this is, for me, the bull run started here, not here. Anyway, so when we look at the 2017 curve, everybody talks about how the bull run started somewhere around here, but actually it started all the way back here, right? So we calculate all of this, and I bought it, and I said, right, let me see the curve. And this is the curve you can see from the bottom to the top, right? And if we are to follow anything similar to this, or even average, or even stay something below this, then we are definitely looking at a six figure. This is what I was looking at on this particular chart. Now, this is what I want to show you. This is the whole video, today's video. Right, I've written some stuff down as well. I want to show you some very, very interesting facts in the chart, right? So this is not me, this is just pure facts. So what we've got here is, you can see, let me try and put it on weekly, so it's going to be you can see more data, and we can move it faster as well. So what you are going to see here is every single halvening date, right? So we've got the halvening date. 1 second. So yeah, so you've got every single halvening date here, right? And what I'm calculating here is how many days, so we're not looking at the price, forget the price, how many days it took from halvening day to the top. So here we can see it took us approximately 53 days in total, to get to this. Sorry, 53 weeks in total to get to this, right? So 371 bars, right, to get to this particular level. So this is where I've marked it, as I said, market top after 368 days. So approximately 368 days. I think because I've put it on weekly showing differently. Actually, let me put it on days. It's easier. Let's put it on days and show you this. This is a lot more easier. Let's get into this, right? So, right, here we are. So this is what we got, right? Right, so there's a lot of calculation going on here. Yeah, so 368, 68 days. You see 368 days here. So we can see 368 days from the moment of halvening to the market cycle top. Fair play, we know this. We also wanted to calculate and see how long it took us from the bottom of the channel to get to the median line, right? So the middle line, this middle line here, how long it took us to get to the middle line. And we can see it took us 118 days, right? So after the 118 days, we obviously had a little peak and then we went down. So what we're looking at is how long did we stay on or below this particular line here. So we're calculating this and we say 203 bars, which is 204 days. So we've got 118 days to get to there. Then we have 204 days to, we were around this line. And then we had 41 days when we shot up. So the last leg, as you can see, was the shortest leg when we did the shoot up, right? But the total drama from the halvening to there lasted 368 days. That's just over a year from this bottom, from halvening to here. So everything else we were preparing for this, but from this very moment of the halvening, we went up there and we did a 368 days until we hit the market top. So what I've did was I've kind of, as you can see, I've put a square around this particular area here, and I'll show you this. I'm trying to show you the similarity here as well, right? So we're looking at this. Now, what you want to focus on is how we had this massive dip here, like a black swan event, right? March 2020, coronavirus dump. Well, what I want to show you, in 2013, we didn't have a coronavirus. So why did we have this dump here? Why did we have this dump? We have no idea. In fact, we had a similar, we went below the line in this particular zone here, right? And you can see this here as well, right? We went below the line. Okay, so this is what I was looking at, that these kind of events do happen, right? And usually, as you can see, before the halvening. Look, before the halvening, right? These kind of events do happen. Now, let's go back to the old, what we're doing. So we're calculating from the point of halvening, so this particular area, from the point of the day of the halvening to the market top, we had a 522 days, right? So we got 522 days. So as you can see, 368, and then we increased and we came to 522 days. And what we're seeing here is similar thing, right? So let's see how many days did it take us to get to this particular level. So it took us 398 days from this particular level to get to the median line. So we're calculating the middle line here. How long did it take us to get to the middle line? Well, that's how long it took. We didn't really see much of a thing. That's why I didn't bother calculating it. There was only a few days. But then after that, we had the parabolic ride. So how many days were we in this particular zone? Let's have a look. We were there for approximately, here we are. We were 55 days. So before, as you can see here, we were 41 days. Sorry, not 41 days, 203 days. Here we briefly had a 55 day around this level, and then we shot up. And how long did it take us to shoot up? This is what we see. It took us 66 days to basically complete the market top, right? So this area here is very significant, and this line to this area here is very significant. So let's move to the next current cycle now, right? And there's more to it as well, and I'll show you a little bit more. We're going to explain, there's so much data here, there's so much data. I'm going to explain a little bit more. So obviously I've explained this part, how the pattern looks very similar. Now from the halvening here to the median line, we've calculated that it took us 238 days, right? 238 days to get to this particular level, right? So far, if we are, so what we're doing is we're saying, okay, this looks very similar to 2013. And if we are to follow the 2013 model, right, and where we've got this particular level here, where we've gone for 204 days, right? 204 days. And if we are to add the 204 days, or approximately 203 days, obviously this should be a little bit longer. In my opinion, it should be longer, but just for the sake of this video, we say we copy the 2013 model and we put this here. Well, this then gives us the end of July for us to get out of this channel, right? Because we've gone up and then we've held up a little bit and we've come down now, and question is how many days is it going to take for us to have the breakout? So mathematically this should be a little bit longer, all right? Definitely we want to expect it longer and see where we go. Now also, one other thing I did was, you see this particular level here where we've got the extension, right? So we've had an extension, so this is 522. Now what I'm saying here is we've got 522 days, right? 522 days, right? But that's 154 bars, right? So if you look here, cycle 1, right, which is the 2013 cycle, in cycle 1 we added 154 days to the bars. So if we did add 154 days, that brings us approximately here, right? So if we add from this particular level and follow the 2017, so 2013 gave us 368 days, 2017 cycle gave us 676 days. If we were just to copy the 676 days, then that actually brings us here, right? It brings us to approximately March 2022 for the market top, and it gives us a 6-figure, and the 6-figure we're looking at currently, right? So current 6-figure we're looking at is $161,000. So definitely gives us a 6-figure, right? Based on these things, right? So we're following this and we're saying, well, if we're not using the data, we're just saying, we're assuming, right? Let's assume this is the case. This is what happens. This is when we have a market top, right? This is when we're going to have a market top, 160, around the March level. So this particular point here, around the March 22, we have, or March 23, we have this market top. Now, one other thing you notice I've done as well. So you got these horizontal lines here, right? You can see these horizontal lines here. These were the market tops we've had. So this is the 2011 market top, so it's a horizontal line here. This is the 2013 market top. We've put a horizontal line here, right? And what we're looking for is, do we ever go back to these levels once we have a new top? So we've had a cycle top here. This is the line, all right? And then did we ever come back to this? Well, no. Right, we didn't, right? As you can see from here to here, we didn't actually come back. So what I'm trying to say is, it seems like we always, right, stay a particular level. So here you can see we were still 116% up when we even dumped, right? I mean, the earlier data are not that accurate, but we can still use it and say, okay, fine, let's see how far we went, right? So here what we're seeing is we were still 400% up, right? Any other one? No. So these are the cycle tops that we can actually see just for now, right? So obviously we've got 2017 top here. This is the 2017 top, and we're currently hovering around these areas. So if we were, right, so what we're looking at here, and let's make this larger, right? If we were to have a market dump, is it likely that we are going to go below this level? This is what I was looking at. And if we were to come and touch this level, which we've never done before, by the way, historically, as you can see, we've never ever come back and touched these lines again. So if we were, so I'm just making an assumption here. I'm saying if we were to come and touch this line, where would we touch it? What would be the price zone? So let's make another box here and show you what would be the lowest, right? Or even if we were, so we just take this particular level here and we say, okay, if we were to come, just this is August, let's say August, if we were to come and touch this line, which we've never did before, and from this particular level, right, what are we looking at, right? What kind of a price would we be looking at? So the bottom, obviously, which is, remember, in history we've never done before, this bottom figure, where is it? Let me see. Yeah, this bottom figure that we've got here is your $20,000 mark. So this is our $20,000 mark top, right, which we're never going to come to. And in my opinion, I think we're going to hover around here somewhere, because we've never touched it before. I think we're going to hover around here. So this sideways action here that we've got, right? And let's put another one here just to show you this particular sideways action, right? I think could bring us a little bit longer and up to around these levels here. So for here, and let me just change this color. Give me a second, so you know what I'm using here. Let's use a purple here, and let's make it lighter. Sorry, a bit more, yeah, a bit more darker. Right. So what we're seeing here, right, what we're trying to look for here is we're saying this is a zone, right? This is a zone that we're struggling to get above. But what if we did get a low? How low could we go, right? And if we just use this particular fib line here and say, okay, just assuming we did come back down here, and just assuming we did come and have a touch point. So what we're looking for is we're saying, well, okay, we're in this zone. We might come down and hover around a little bit, and we could even touch this particular point. That would give us a $28,000 low for the cycle before we do a rebound, right? So this is what I'm looking at. You know, I know it's a little bit confusing and complicated, but please do understand what I'm seeing here, right? So once we have that, I've got a feeling that then we might do our market cycle top and then go and complete to that 160K. Because this is so similar. Everything here just looks too similar to the 2013. And what I'm going to do, just to show you what I mean about that, just to show you, so similar. It's unbelievably similar. So let's grab, one second, let's grab this. So let's grab this from the halvening date to the market top, right? So we're grabbing it to the market top. Let's grab this particular thing here. Let's move over, all right? And this is what I'll show you from the halvening, right? So this is nothing to do with anything else, just from the halvening, right? So it won't even show properly, but let's do it anyway. So just from the halvening, if we are to use this, right? And if we were to follow the cycle, right? I mean, we can bring this down a little bit, I think. No, it just too low. It doesn't like it. Come on. Yeah, it doesn't like too low for whatever reason. But anyway, just for the sake of this, right? So what we're saying is we've had, this is the first dip. So this would be from where we were. Where is it? So what we're looking at here is, imagine this to be our first dip, right? So this is our first peak. Yeah, this looks much better. So imagine this was our first peak, right? That's all I'm trying to, so remember, I'm trying to show you a pattern here. So this is our first peak, right? Obviously, we're not going to have the same curve like this. We might go this way, but imagine this, we had the same curve, right? You know, this is our first peak. We come down, we come down, we touch this level here. So what we're doing here is we follow the chart, we come down, we bounce here somewhere, and then we come back up here. So it might take a few months for us to get back above this white line here, right? So we get up and then we continue in the market, and we might move sideways like this to get to this level, right? So that's what I'm trying to say here. This looks like a double peak top, right? So we are going to definitely see another peak, because, and you'll understand why. Give me a second. Let's get rid of all of this. Even that, actually. Right, actually, let's get rid of this. My bad. Let's get rid of all of this. We don't need this. This is just an example, guys. Remember, this is not the main stuff here, right? I just want to show you something, right? So what we're looking at is, you see how many times we've gone above this white line, median line, right? Every time we've gone above this median line, we have confirmed a market top at some point or another, right? This is what I'm trying to show you here. So you can see here, this is like early days, so let's not even bother about that. But every time we come close to this, we usually get rejected. We don't want a bull run. When we cross over, we end up having a top here. When we cross over, we've signaled we want to go to that top, right? When we've come below this, right, after a top, we're definitely confirming we want to come to the bottom here. So right now, as the 2013 model, you can see we've gone above, we peaked, and the market definitely wants to have a top. So the market says, okay, so we've come down, we're in this particular zone here, right? So what I'm seeing is this particular area here. Actually, I should have just copied this area. Yeah, this area. So we're pretty much similar in this area. So let me just copy this area, this specific area here, right? So let's take the top here, and then let's take this candle here, copy that. Yeah, let's copy this. So let's copy this and see what that looks like. All we're trying to do is find some patterns, guys, nothing more. We're not trying to, make things. We're just trying to have a theory and say, okay, what's the cycle telling us? What could be the possibility? What makes sense to us, right? So we're looking at this cycle and saying, right, what makes sense to us? So if we were to have this and we are having this dump, so yeah, very similar. Here we go. This looks much better, right? This actually looks a lot better. Yeah, I think this looks very good. Right, let's get rid of some of these boxes, or we can leave it, doesn't matter. So if we were to follow this model and we say, okay, we've had a dump, we're coming down, we're going to come down, and we might even come down all the way up here, and then we have this particular level. This kind of matches with the boxes that I've drawn. So because I'm obviously copying that pattern, that's the reason why it does. But everything is suggesting that we're going to have this level. We've peaked up, we want to go up, we had resistance here, we've been pushed down, we're going to find support around here, and at some point we're going to go back up. Worst case scenario, we might even come back down to this level. So this is why the 20k is a very crucial level. We might come back down here and then bounce, right? So the whole process for all of you guys who are new to the game, right, this is very important. You have to understand, anybody who's very new to this game, understand one thing. I talked about in another video as well. For us to get to, from where we are here to where we were, like this particular level here, right, or even currently where we are, look at the maths. Every time we did it, it took us time, right? So when I'm calculating this halvening date to this, look, 398 days, right? We're looking at 300. This is over a year before we even hit the middle line. Over a year. And then when we hit the total top, right, when we hit the market top, right, so from this level to that level, when we hit the market top, 522 days, guys. So the bull market wasn't over. And now when we talk about, so obviously we're talking about extending time. So this bull market was over quicker than this one, because this one took 144 days longer. So assuming we follow the same thing here, right, we have this particular model, the 676 days, then we're nowhere near it, right? We still got a long way to go, because this completes our 676 days, right? So this purple one here, I've put 77, but 66, right? So 76. So that's what we're looking at. This purple box here, this is where the cycle should bring us. And to be true to the model, if the model is extending, then it should even bring us even higher, maybe a few more days, maybe even add another month or so, because it's not exact, so it could come up to here. I doubt it's going to be a short cycle. It's definitely going to be a long one. And the pattern I'm seeing that we are going to probably most likely see, forget this pattern here, the pattern I'm seeing is we are coming down, as you can see right now. I've got a good feeling we are going to come somewhere around this level, worst case scenario, right? And I'll give you a best case scenario as well. And then we're going to go this way, sideways up to here. So we might see this particular level here for a good few months. So where we are now to when we actually finally decide to break above, right? From the top. So we're looking at from the top to here. So we might have a total of approximately, according to this 2013 model here, but I'm saying if I give it another month more or something like that, we might see another 374 days. So we might actually see another full year before we get to this level. That also gives us some bonus, because this line also keeps on moving up. This line also keeps on moving up. So that's what I'm looking at. This is pretty crazy how we're thinking. Remember, once I made a video a very long time ago and I said there's a 39k to 65k is actually our future bottom. Well, this model actually says that that is the future bottom, and then we carry on. So that means that by the time we hit this line should be moving, and in the future this line would be sitting around the 65k at some point in the future, right? So if I was to ignore the days here, if I was to extend this, at some point in the future, this bottom line will be this, and then this will curve upwards, if that makes any sense to you. So these are just like deep dive. We're looking at a lot of data here. We're trying to do some maths here and say, okay, what seems to be the most logical, reasonable thing. Also, I said I was going to show you the, so I've got you on the weekly. Let me just show you on the weekly. So the bearish, the bullish scenario, right? The bullish scenario. So this is like kind of a mini bearish scenario, and then we move up, and obviously we're going to do higher highs. That's a different one. The other scenario that we're looking at, which could play out, is that we have this level here, and then we don't bother, and then we just rebound here, right? And then we actually go parabolic quicker. Now, if we do, let me change the color for this, right? So let's put it yellow. So if we did this, this is actually bad. We actually don't want this, right? We actually don't want this. This is actually a lot better. And I'm actually going to draw one more line for you. Give me 1 second. And I want to show you what I would really love to see. So this is personal. This has got nothing to do with the market or anything. This is just my personal opinion. So understand where I'm coming from, right? So I'll tell you what I really want to see. What I really want to see is us go like this. So follow this green line. I want to see us go like this, somewhere up here. Then what I want to see is us go like this, like this, like this, like this, like this, like this. That's what I want to see. Do you see what I'm trying to show you? So we've come all the way down here. I want to go sideways a little bit, but when we are here, we're creating a 30k bottom. You can see we're creating a 30k bottom. Once we create a 30k bottom and we start moving back up, right, then it's a lot more healthy and a lot more sustainable. But also remember, this particular white line here, this white line here may not be in this position. It may be somewhere up here. So if it is somewhere up here, it will give us a higher number, right? So it would definitely give us a higher number, and that's what I'm looking for. I'm looking for this to end up giving me, right, a good opportunity, right? So where is it? Let's put it back here. Let's go back here, right? So this one to give me an opportunity to come back here, because our new white line that we will have, right? So the new line we will have, this particular line should be around here, around that particular time. So if it is around here, then we can see a lovely figures there. I'm not going to mention anything. That's what I would love to see, right? And this kind of follows suit to what Plan B has said about his stock to flow model. And this is just on the next level, right? This is the model we would really love to see. So, you know, let me just go back 1 second. Let me just delete some of this. Yeah, like let's come back here. So again, remember, this is the kind of very bullish but not healthy. This is okay, it's not that bad. This should be a logical model, but the best model is this particular one here, right, where we create a bottom somewhere around here and then go. This is the zone I'm looking at. That's the one we want to follow. It's going to be a lot more healthy, and it's going to give us a lot more gain. But ultimately, guys, just to kind of show you on another chart, let's move over to another chart. All right, anything around these particular levels. So what we're looking at is, let's put a line on here. Sorry, my charts are not the cleanest charts on the planet. Anything from, so where we are right now, anything above this level here is a great buy. All right, so the zone we're looking at, all right, this particular zone here is a massive great buy. This area here is the best ever buy you're gonna get. That's what we want. And then move up, obviously. So ignore all of this. These are other maths that I've been doing. Also here you can see kind of, so this median line here kind of broke this. We held support yesterday. We held support from here. We pushed it back up, but the market sentiment was too high and it just went bullish. As you can see, sorry, bearish. As you can see, 1, 2, 3, 4, 5, 6, 7 days in a row, bearish, right? And this is why I said like this, right? Even the wicks. So the wicks are not actually that good. Wicks have a story that the bulls came in and protected it. That's a story, but the fact is the body. The fact is the body, and here you can see the fact was the body. So when we look at the facts, we say, okay, was this actually a high? Well, technically yes, but actually no, right? Was this a lower low? No, this was a lower low, right? So compared to this body was lower. And these are all indicating the market wants to go down. So we did not get a higher low. Remember this candle, I said this is the candle that we need to go above. We didn't get a single body above there. right? And this is why it was worrying me. I was like, okay, there's a lot of stuff going on. We need to double check. So currently, obviously, market coming down. We still have this in play, the 28K, 28,900 something, whatever is in play. And also looking at the older chart, you can see that we still have, and this is the same lines, guys, same lines. We have not changed the lines, right? These are the exact same lines, exact same drawings. Some people have even copied the chart, and you can see these, right? So on this particular level, you can see we found support on the what was it, 31,776. We found support on the 31,776. Obviously we broke the pattern. We come back into the zone, and we are going to be probably looking around this area. But as I said to you, this would be the greatest opportunity to buy. But when it does, now this is what I want to show you. Think about it like a how would I call this, quicksand, right? I've never experienced the quicksand, but I've seen it in the movie. So we have a candle that brings us into this area, right? Brings us into this area. Now this is very important. You have to understand this. We have a candle that brings us into this area. Think of this box as quicksand. So what's going to happen as soon as we got that, we're going to have something like this, right? We're going to have something like this that's going to bring us down even further, right? It's going to bring us down even, it's quicksand. Remember, it's quicksand, right? The only time this area will not act like quicksand and bring us to this 20K level or 21K level, whatever level, right? These lines here, basically. The only time we will not have this is if the bulls or the whales don't want to have an extended market and they want to make profit right now. Then we're not going to have that, because in this particular zone, so if we draw a box here, just for the sake of it, draw a box here, in this particular zone, right, they will have a massive buy order. And if they do have a buy order, then instead of going down like quicksand, so let's actually let's change these colors a little bit. 1 second, let's change these colors a little bit. So we're doing, these are red candles, right? These are red to show you that this is red down. So if we had the bulls in this particular area, they will basically want to, if they want to reverse it, and they say, okay, do you know what, we this is good, this is going. So this is what the scenario is. If the whales feel that this is now becoming below their buying zone, so they don't want to lose money, well, what we're going to see is the quicksand may not even touch, right, or may just wick below, and we might end up seeing candles that push back up, right? So the way we saw these 7 candles come up, we might end up seeing candles push us back out of this area, right, back into this particular area here. This is what we might see, a complete reversal, right? And a lot of the time, this is when also there's a like, I think it's there's a few guys who use the heat map. So everyone that knows the heat map, this is where the heat map comes in handy. So remember, all this time we've been using the SRC and the Crypto and this and that, right? We don't need any of them, right? Here, as you can see, I'm not even using them. We don't need any of them, right? At this particular level, all you need is your heat map, right? All you need is your heat map, because your heat map will tell you the story. Is it going down or is it going up? Is the market bearish or is the market bullish? That's what we're going to see. Now, let's leave this drawing here, and also I'm not going to say anything. I mean, obviously we've touched it here. We just wicked. There's nothing significant here. We are still going to potentially come down unless the bulls bring it back up. And if they do, remember, this is the zone that they need to bring it back up. If they do not bring it above this specific line here, then yeah, it doesn't make any difference for us. We're still going down, right? It's still going to be very bearish. So let's see what happens there. Now, let's show you, let's take these drawings off for a second and let's activate Fibs here. So this is where we are right now, and let's change a few colors here so you guys understand why I do what I do. So I'm going to switch that one off. Sorry, not this one, sorry, my bad. So I'm going to switch this one off. I'm going to switch this one off and leave that, right? Leave that, that's fine. And then what I'm going to do is this one, we'll make it brighter. Right, let's make it lovely and bright so we can show you some of the stuff. Actually, let me get this one on as well, and I last time did it this way, so let's do this as well. So what I did was I actually changed the colors a little bit. Obviously you got to customize the colors and you can save it the way you want, but I don't, it's not one of my main indicators that I use because it's not actually that relevant, so we don't really bother with it with this particular one, right? So let me just show you what we're seeing right now, right? So we've got all these data here. All right, this is a kind of a dead zone, ignore that, that's not that. This is the one where you sell your house, right? So this is the point where you sell your house. However, there are some occasions where we come here. This is bearish zone, right? So when we come into this zone, right? When we come into this zone, actually, let me get rid of this thing. So let's get rid of this, right? So it's easier for you to see, right? So when we get into this zone, this particular zone here, it's actually kind of bearish. This is the quicksand zone, by the way. So when we're talking about quicksand, remember, this is our, so let's put something here, this particular area here, right? This particular zone here would be our quicksand zone, right? Let's get the drawings off, right? So we've got a quicksand area here. We might come in here and pull it down and come all the way down here. As long as we don't go here, we're fine. And if we did, this would be that bearish scenario that I showed you here. Where is it? Here, right? So if we are to, let me move this over, right? So if we are to come into this zone and do this kind of a pattern, this white pattern here, that would be this particular pattern here. So we would come down here, touch here, and go up and play this, right? So this would be our zone, bottom of that channel. So remember, when you look at this channel, right, this particular bottom line, this is same as this particular bottom line. So that's what we're going to see, right? And we might go for a few months. Worst case scenario, that is. If we didn't, and we come into this level, you do not react. This level here, you can dollar cost average in downwards, but you do not react. The time you react is when we come back to this particular level here, where the yellow meets the green. If the yellow meets the green, all right, and then you can react and you can buy some and whatever you want to do, and then we come into this zone here and we break above this zone. This is like our so we know we got our resistance here, but this is actually a bigger resistance. This, as you can see here, this 43.2557 is a bigger resistance. Once we go above this level, that's when the market trend changes. This could last months, right? This could last months, but look at it, this would be a good buy and hold zone. So if you buy around this zone, you want to buy and hold for 5 years, but do not buy in one go, dollar cost average. And if we go into this, my God, you got a bonus. You got the biggest bonus here. If we go into this zone here, you got the biggest bonus ever, right? And I highly doubt it's going to come to this, right? I think we might touch this, but I doubt it. I don't think we're going to go deep down here because we've never done this. This is what I'm trying to show you. Look, guys, right? It's a very, very rare occasion. So only time we did it was in, you know, a black swan event. That's when this will happen, right? So this is what happens and then quickly recovers, right? Every time we've ever had this, let me show you. Every time we've had this, all right, where we've gone into this red zone, right? So we've entered this red zone. This is a bear market, right? So this is where we are, and we come back again, right? So this is what you have to understand. But let me show you the explosive moves that we're talking about. So let's go all the way back. Let's go all the way back, and I'll show you. Sorry, this video is slightly longer, but there's so much detail here I wanted to show you. All right, so we're not getting any data here, that's fine. Right, let's show you this. Right, so what you're looking at is once we come into this is quicksand zone. Remember, quicksand. So we come down and we're hovering, we're like, okay, almost breaking up. No, we're coming down, quicksand, right? So it pulls us back in again. Right, it pulls us back in again. Then we eventually manage to have the candles to confirm to break out, and that's when we do the market top, right? Same again, we come down, right? We come down, quicksand zone, right? Quicksand zone is not good. Quicksand zone is not good. As you can see, quicksand zone is not good. So we go back into this level, and then we might have a black swan event here, and we stay hover around here for God knows how many long. And then you think we're bullish. So this would be, these zones are the best zones to buy. This is like the blood in the market. You buy at that time. So when you buy at that time and you buy with a 5-year intention, you hover around. Because what we're trying to do is we're not trying to react. And what we do is we wait. So we buy in these red zones if we can, or in these blue zones, whatever we can do. We dollar cost average in this particular level. Then as soon as we come into this zone here, right, and we've confirmed that we're coming back into this red zone, and this red zone is like market top, this is the market bottom, this is a heat zone. It says, right, we're getting hot, boom, you shoot, you make that top, you get the hell out, right? You sell and you get the hell out, right? Normally you'd sell around this top level. This is when you know you heat it up, and then you come back down, right? And then when we come back down, you know, like here in this particular scenario, it didn't go into the quicksand zone. It just went up and it just said, okay, we're going to do another market top, right? So whatever it wanted to do, it did it again. So that continued, which is fine, right? Heat zone, as you can see, plenty of time. We've been hovering around this area, and then we've got this particular level here in 2016 where we went back into that zone, but again didn't stay much because we were still in a bull run. So we had this particular level here in 2016 where it went to the peak, came down, and then it peaked out here, came down again, peaked out here, came down again. Look how we're doing it. We, you know, whenever we come out of this zone into this zone, we just explode. Every time we come into this, we explode, right? Every time we come here, we explode. And whenever we're inside the zones, we go sideways, right? So this is what we're looking at. So you can see here, we come inside, right? And then as soon as we entered here, explode. We come inside, as soon as we're here, we explode, right? I know I'm repeating myself, but guys, this is what you have to understand. There's a lot going on here. So when you look at this particular level here and you see that these are the perfect buy zones, right? Doesn't matter what price it is at that point, you buy. I'm telling you, you buy. I'm not your financial advisor, by the way. So yeah, don't try and use that against me. So this is where we are right now. We've come into this medium zone, this kind of a healthy zone. It's an undecisive zone. Quicksand, we might come in here, and if we do, we might stick around here, and if we come into here, perfect buy opportunity. But as soon as we come back into this and decide to touch this level here, right, we go from here to here, that's when we're shooting, right? That's when we're going to shoot, right? That's what you need to understand. That's what's going to happen. Yeah, we'll see where we go from there. Now, straight over to Ethereum. Ethereum suffering solely because of what Bitcoin's doing. You know, I always say this, like, Bitcoin's king. Ultimately, remember, whatever direction Bitcoin moves, everything will move. I know some people like to say they're correlated or they're kind of connected, or this. It's not. Bitcoin's the king. Until somebody takes Bitcoin's dominance, Bitcoin's going to move the market. Until somebody else, you know, another coin, Ethereum, for example, takes over that dominance, then, you know, there's a reason why we call it dominance, because it's dominant. You know, people trust Bitcoin more than any other of these coins. You know, people have 10,000 reasons not to trust Ethereum. Why? Because most of the scams operate on Ethereum, right? So just hope that kind of makes sense, right? This was the shorts. I was looking at the shorts because, you know, we had all these shorts going up there, and then we had a little bit of an event where a lot of the shorts got dumped, literally wrecked, right? A lot of the shorts. So this, you can see, this was the last 16 hours, right? A lot of the shorts got wrecked. Let's see what happens anyway. I'm not really that fussed about it. Also, I wanted to quickly see the total market cap. I did say I was going to show you the total market cap, so total one. And I already got my fibs and everything ready, and this is what I was talking about, the 1.2. So as you can see here, right, this particular line here is at the 1.2 trillion. So we might actually come and bounce on this 1.2 trillion. And, you know, every time we break trend, as you can see, we've got three specific trends here, and I have explained it before. Let me go on the weekly just to show it to you guys, because this is just going to be a quick one, right? You see this red line is the greater trend, right? This is like a greater trend. And then you've got your blue line, which is this market cycle trend, right? And then you've got this yellow line, which is a temporary trend, right? That's all we're looking at, temporary, nothing more. So when we come back here, what we see, right, is that we need to get above this trend. Obviously, we're definitely above this longer time trend, but the median trend, we have struggled and we have calmed down. We needed to hold this, we broke below, we came down, and we are going to find some support around here. Worst case scenario, we might find some support around here. So a 1.1 is actually on the table, but 1.2 looks a lot more, because that's what the Fibonacci's are telling us. The Fibonacci says to us, like, guys, if we do have a dump, 1.2 trillion should be sustainable and we should bring it back up. So we've got a lot of resistance on the way up, but the good thing, and again, the good thing is, when you look at this, you'll understand, where is this indicator gone, right? Let's find it here. The good thing is these lines. So every time we come down, these lines are always going to be higher. So if we went here and we came down, as you can see, these prices are always higher, right, over time. That's what I'm trying to show you. So every time we have, you know, this kind of a trend, we are going to have higher lows, right? We are going to have higher lows. What I mean, but obviously it's a lower low on a short term, but on a longer term, it's a higher low. on the longer term, you got to look at the longer term, the bigger picture. It's a higher low. So that's what it is. Even on Bitcoin, I know a lot of people don't talk about this. Let's find a good chart for you. Yeah, here, let's find a good chart for you. So when we're looking at this particular chart here, let's move it over to weekly if it decides to open up. Of course, in the short term, you're going to say lower low, lower low, lower low, lower low, lower low. But on the long term, what we're looking at on the market cycle, this is nothing. All right, on the market cycle, what we see is this is only a temporary lower low, but you know, it's still a higher low for us. So compared to all of this here, it's still a higher low. Now, looking at the bigger picture, obviously, monthly candles. Now, we know these monthly candles, we were expecting this to be, we were expecting this one to be around the region of, sorry, this was supposed to be a green. It didn't. It's very similar to 2013. We don't know what's going to happen, but let's see. I mean, let's see. I really don't know what to say. I'm just going to say, let's see, because there's everything is suggesting it needs to go up, but this correction could be a few months. So if we follow, and I think I have something here to show you. Let me just check. Is it this one? Is it this one? Let me see if I can find that chart for you guys. Nope. Where did I put it? Nope. Where did I put this chart? Let me see if it's here somewhere. Give me a second, guys. Nope. Oh yeah, sorry. This is the one. This is the one. This is the chart. Sorry. My bad. My bad. My bad. All right. So this was the chart, right? So, yeah, I made some mods to it. I made some modifications to it. So I want to go on a monthly just to show you what I'm seeing, right? So remember, monthly, this is where we are right now. We had 3 months of bearish candles, right? I want to show you on 2013, right? This is what we had. We had this particular level here where we had 3 monthly candles here. Actually, where is it? Let's find this one here. Let's look at this one. So in 2013, yeah, 2013, as you can see, when we hit the median line, then we had 1, 2, and this technically was a bearish candle, but then it got pushed up right at the end, right at the end. So if we are to just kind of calculate and say, okay, how far, what did it do? Let's do some measurements. $53. Okay. I don't know if you saw this. This is pretty insane. Pretty insane. Let me get rid of this box. Right, just to show you what I'm seeing here. This is insane. 53. So here so far. Hold on, let me cover this area like I did the other one. It's weird. Anyway, so what we got is 53% here, and we've got a 53% here. Right, so 53% here, 53% here. This is what we're looking at. This is the type of a pattern we're following in order for us to get to. So I've got a feeling that this may, this could easily reverse. Right now, I don't think anybody could give you 100% definite. We can only give you scenarios. So obviously, I'm giving you my scenarios on what I'm feeling, what I'm thinking, everything that I'm suggesting here. It's only my opinion, guys, by the way. So this is not a financial advice, but if you look at this particular video, you will notice the numbers and everything, what I've put here, all the maths, how we've basically come back to, what we're doing, right? 2013 seems to be playing a very big part in this particular game, right? 2013 seems to be the biggest player here. Every pattern that I've seen is playing the 2013 model, right? Every pattern, everything I'm looking at playing the 2013 model. So you know, just if you are going to be buying right now, it's going to be the best opportunity. But remember, guys, whatever you do, right, whatever you do, please, 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 buy with the intention to be in it for at least 5 years. Because if you're not going to be in it for 5 years, you're going to have some serious trouble, right? And we are going to have a pretty extended bearish scenario, right? So they were going to be in this zone for a very long time, very long time, right? I'm looking at up to, as you can see, worst case scenario, March 2022 for the top, right? For this bearish cycle, we're looking at up to October, right? So we can see this extending over to October. That's when we might actually eventually break out. So there's a few months. Be prepared for a good few months. This is just going to be your best opportunity to buy as much as possible. After that, yeah, we should be moving up. So anything before October or around October would be the best scenario for us to start moving up. That's what we're looking at. And you know, and then by, say, market should top out approximately around current, based on this model, by the way, this is not the exact, but we're just saying based on this model, market should top out around the March 2022. If not, it might even extend even further. Logically, it should extend even further. So let's have a look and see what happens. Sorry for the long video. I hope all of this made sense. Like, share, and subscribe, and I'll catch you on another one. And yeah, that's about it. Adios, amigos.